It's a big day on the macro front as we'll be watching out for the Q4 GDP data. Now, economists are expecting a sustained recovery in the last quarter of FY23. What are the factors that are driving this growth momentum? Hersh joins in with the details. Hersh?
Well, yes, first off, the benchmark numbers, we're expecting around a 4.5 to 5% expansion with regard to Q4 numbers. It's a slightly higher base, of course, and therefore that kind of a growth number is what's anticipated. Also, with regard to the full year FY23, we're expecting a growth of 6.9%, just below that 7% mark. Let's also talk about a few comments which were made by the RBI governor at a recent conference. So there you go, you have your FY23 growth numbers come straight through. 6.9% is where that number is expected on a base of 9.1. So a slightly higher base compared to what was disclosed same time last year. Let's quickly move on though. The RBI governor spoke about growth being slightly above 7%. So he's slightly more optimistic about that growth, particular growth number in FY23. He believes that steady momentum in high frequency indicators have been seen, especially in Q4, and that's sustained post the Q3 numbers as well. He expects GDP of 6.5% in FY24. Of course, that's given where oil is currently at, and hopefully inflation stays the way it is at the moment. They are also assuming for a normal monsoon. And largely, he's quite bullish with regard to the services sector. He believes that the services sector has continued to perform very, very well into Q4 despite the rate hikes. So they've taken rate hikes well. Capex and infra spending has picked up as well, and that's really what's aiding GDP growth according to him. And lastly, he sees a revival in the private Capex cycle as well. So on the back of all of that, he believes that a 7% growth number is quite reasonable to expect. And he also suggested that capacity utilization is at 75% or thereabouts. With regard to high frequency indicators, you can look at the direct tax and indirect tax collections for FY23 have gone up by 17 and 22% respectively. So that's a good plus. Also on the PMI front, activity has been quite robust. You have seen manufacturing as well as services PMI above that 55 and 57 mark, which is again definitely a positive. So with all of that, you are seeing power consumption also at roughly 10% in FY23. That's a solid growth as well on the power front. And, even credit growth has been quite robust. Overall, it seems like the growth is quite good. 7% plus is the expectation.
Very much. That's what we'll be penciling in when it comes to the GDP number.